Welcome back to the Money and Wealth Show. I'm Sterling Fox in conversation with Michael Levy this week. Michael, we talked about the volatility of the economy, not just here in Canada, but globally in 2010. Let's zoom in on one sector of the economy, one that's terribly important to everyone, housing. In the United States, they had another awful year. Housing prices continue to fall and have not even found bottom yet. When they do, they're likely to go sideways for a couple of years. It's going to be a long time before we see a bounce back in the U.S. housing market. Now, we haven't experienced that sort of wretched performance in the Canadian market, but 2010 has been an interesting year in housing in Canada.
In Canada it's been interesting. In the U.S., as you say, it's been dreadful.
Oh,
so
absolutely.
That's not even interesting. So let's start with the U.S. if we can, and then shift back to Canada. The U.S. is going to have 3 million foreclosure notices this year, of which they will foreclose on 1 million houses. It's going to be the worst year, worse than 2009. And as you say, there is no bottom in sight just yet.
Yeah.
Now, I love hearing that, because when I hear everybody doom and gloom, no bottom in sight, the number of foreclosures, worse year, it makes me think that if I wanted to buy a property in the United States, this might start to be the time. In other words, you've got to bite the bullet. So if you're thinking of a Palm Springs, you're thinking about a Scottsdale or Phoenix, Arizona.
Or Florida, or where?
Well, Florida, yeah. You might want to start to nibble away right now, because I don't know that you're going to get anything much cheaper than a bank foreclosure that wants to get the property off their books. So to me, the U.S., it's not going to turn around anytime, I don't think, to probably, I'll give you a guess, 2014 maybe. Realty Track, which tracks foreclosures, tracks the notices, tracks what's going on in the market. Realty Track is looking for 2014, and they're pretty good and they're objective. But that's what they do, and that's what they specialize in. Coming into Canada, the Canadian Real Estate Association, the beginning of December, came out with a forecast that said 2011 is going to be a soft year, that we're going to ease up a little bit, that we're going to have sales come off, prices come off. Well, guess what? Tuesday morning, RE/MAX comes out with their report. RE/MAX says the markets are stabilizing already. They're going to stabilize even more in 2011. We're going to see a 10% increase in sales and a 5% increase in value in 2011, and the market's going to be pretty darn good. CREA, Canadian Real Estate Association, soft. RE/MAX, stabilized. Last segment, Canadian dollar at 93, Canadian dollar at $1.01.
Yeah.
Gold going to the moon, gold into a corrective phase. So I think you've got to take all this information, assimilate it, and come up with your own plan of where you're going to be.
Well, for a real estate company to make a buoyant prediction for next year is rather self-serving, and I would think their credibility would be a little more stretched than perhaps the Real Estate Association, although they're both in the same business ultimately.
They are in the same business, and RE/MAX is probably as good a bellwether as any company. It used to be Royal LePage was the bellwether.
Yep.
I would say RE/MAX is now. The Real Estate Association, again, I can put credence in their numbers, but anecdotally, and only anecdotally, I can tell you that our marketplace in the lower mainland of British Columbia and stretching onto Vancouver Island is stable. There is action. There are houses buying and selling. And it may not be the numbers that they were some years ago, but they're kind of getting pretty darn close. But I think that we must remember one thing, Sterling, is they're not making any more property. And a lot of people want to live in Vancouver, on the lower mainland, in Surrey, in Langley, in Victoria, on the other side of the pond, the water. They do want to live, and so you do get that vibrancy where you get offshore buyers to compensate for local buyers who may not want to take the plunge into the market.
Question for you though, and you've already alluded to this. If I'm sitting in Singapore or Hong Kong or Tokyo with a stack of cash looking to buy some North American real estate, why would I consider buying anywhere in Canada versus somewhere in the United States, given the all-time low prices that are now available to me in the U.S. market virtually anywhere?
You ask any outside investor or any person who wishes to relocate family, whether they want to relocate in Canada or the United States, and I will guarantee you the overwhelming majority want to locate in Canada, and the overwhelming majority of those want to locate in Vancouver. Climate, proximity to the Asian market,
sure,
proximity to where home could be, the stable government, the stable investment climate, and our welcoming of immigrant, as in immigrants to come and live, immigrant investors. Canada is a much more welcoming place. So you might be able to get the bargain in the United States, but you sure can't get the quality of life that those who would come and invest here or come to live from offshore, particularly from Asia, find right here in the Lower Mainland.
And that's what distinguishes housing from every other sector of the economy, because it's so much more difficult to make a cold, calculating, strictly business decision about where you live.
Absolutely. Now for investment, I would venture a guess, a well-educated guess, that the investment climate will continue to be better here. You take a look, and I'm going to just again now anecdotally go to the west side of Vancouver because that seems to attract. But Vancouver as a city attracts, and it attracts because of, A, climate is better than anywhere else in the country. The crime rate, though we may look at it with jaundiced eyes, is quite low. It's safe to walk our streets. A provincial government that welcomes business, low tax rates, lowest corporate tax rates in North America. I mean, you've got to look at all these pluses and you say, hey, you know, that might be a place other than where I live right now where I'd like to establish for my family. Great schools, great universities, and guess what? It doesn't cost as much to live on that level than it does. I mean, you can go to places in Asia where the taxation is very, very low, but you also don't have the amenities and quality of life unless you're living in an upper echelon, in an enclave, in a gated community. Where here it's generally a lot more comfortable.
Our special guest this week here on the Money and Wealth Show is financial analyst Michael Levy, and we'll be right back with more.
Hi, I'm Larry Ray, President and CEO of Gold Ray Resources Corp. Our major project is in Shandong Province, China. It's a gold project with a 43101 resource. We're currently negotiating a $16.5 million US loan to take it into production at 1,500 tons per day. For more information, go to goldray.com or phone me directly at 604-531-9639.